Okay, hey, good morning, good morning, good morning. Good morning. Hopefully we have sound. What is the date? I know it's a Friday. Friday, December 8th, 2017. An opportunity to trade non-farm payrolls live. And it is Trade Non-Farm Payrolls Live 140. I think that's about right. Give or take a few months, 140 months of Trade Non-Farm Payrolls live here at fxstreet.com. Where? FX Street. So good to see you, everybody. Hello, moderator. There's no moderator like our moderator, like no moderator I know. So, hey, I guess we need some charts. Let's see, some charts. Where'd my charts go? There you go. You should see 6 charts. Now, just to let you know, this is a cold start. Yesterday, I got on a plane just after midnight and flew for 31.5 hours. But that doesn't count like the to the airport and the after. So I had about a 34-hour day. And I got home to do this webinar. Nice. Yeah, 11 years. I think it's more than 11 years, isn't it? 12 times 12 is 144. So we're 4 months onto 4 months away from 12 years. How's everyone? Wayne, I'm looking sharp today. Oh, nice. Thank you, Albert. Appreciate that. Not bad, huh? Just recovering from a 34-hour day. All right. So that's how important this is to me. That I plan travel around this event. It's not a coincidence that I'm here. Anyways, whatever. It's been very difficult doing my normal coaching and stuff. It's been very difficult. But clients at Traders Way are patient people. So anyways, hello, everybody. Just that's the Traders Way diamond in the sky. Nice. So welcome to Trade Non-Farm Payrolls Live number 140. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily, let's do it this way, indicative. Oh, where did it go? Come on. Come on, Bubba. Let me start over. Let's do the big disclaimer. Welcome to Trade Non-Farm Payrolls Live. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Wait, that's not the long version. How did it go? It's shocking that I don't remember. Pip by pip, candle by candle, with her, right? Anyways, wow, I can't remember. I must be really tired. So anyways, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Boy, I wish I could remember the long one. So anyways, I don't know, it just bugs me. Oh, I know what it is. Let me do this. This is important to me. The purpose of this presentation is education. This is not an alert service. I'm not here to make trade recommendations. But I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Whew. got scared there. And I couldn't remember that. I'm like, oh my God, I'm getting old, right? Got a couple of gray hairs here, but gee whiz. So at least for the out of honor and respect to boot campers. Anyways, all right, let's start. Let's start here because again, I've been traveling. I just got back from Singapore. Albert says, Trader's Way, best broker ever. Yeah, so I just got back from Singapore. Yeah, so a little slow. Having traveled for 34 hours, I don't really, I haven't been watching the market as much as I would have liked to. So we'll just do the best we can today. Let's start with the basics, though. This is, your it's not a down dog. What do you call this? In yoga, whatever. Ground and focus. Capital preservation. This is part of what I used to call the FX Bootcamp credo. I believe I put it in my book that I wrote 8 or 9 or 10 years ago. It's really important. I got this from a business planning retreat I did with myself back when I first started trading as a professional. Before that, I was a venture capitalist. Before that, I was an almost successful. I was almost successful in the Silicon Valley. And then before that, I ran a nonprofit organization with 3,000 people, sat on a board of directors with George Soros. And before that, I was a college student. So there's my life. So anyways, I did a business planning retreat with myself when I started my Forex trading business, because wouldn't you do that with any other business? Business plan, pro forma cash flow statements and stuff. Well, that's what I did. And out of this 2 or 3 day retreat, and I had board meetings, and I had outside guests. I took notes. I invited myself. It was very, very serious, like really, really serious. But part of what came out of this business planning retreat were the basics. I call it a credo, which is true, but it's more like the basic building blocks for this successful business. If you break these rules, your business simply fails, right? You just can't mess with the DNA too much of success. So it all starts with the number one most important thing is capital preservation. I realize that the less capital I have, the more difficult it is to make money. Now, it's always difficult to make money, but let's say you're trying to make $1 million a year. Well, if you have $5,000, that's going to be difficult. If you have $50 million, it's much more likely, right? What does that mean, though? Well, what it means is that cash is your product, cash is your service, cash is your inventory. Cash is king. I mean, you have to have cash. You have to have money to be a Forex trader. So I realized the absolute most important thing, more important than making money, is not losing money. And if you have that attitude right from the beginning, you're, I think, one step closer to becoming a professional. You just can't lose money. You just cannot lose money. You are not allowed to lose money. So you have to protect that. Another thing that I discovered when I was doing pro forma cash flow statements and stuff and tweaking with all the numbers in my models was that, put this in your cap. If you lose 50% of your money, you need to make 100% return to get back to zero. Let me say that again. If you lose 50% of your money, it takes 100% return to get back to zero. But if you're conservative, it's really difficult to double your money. And just to get back to zero, that's a lot of effort. And we know if you blew out 50% of your trading account, the only way you're going to get to 100% is to accept risk and leverage up and giant lot sizes and all that kind of stuff, which is how you got to the situation where you lost 50% in the beginning. It's insult to injury. It's injury to insult. And it's also, you're basically throwing yourself off the bridge. I'm dehydrated like you wouldn't believe. But that coffee's great. So anyways, I also at the time was running FX Bootcamp, or starting FX Bootcamp. Actually, FX Bootcamp came out of that same business planning retreat. So if you know me from FX Bootcamp, that's where that came from. Because I realized one of the risks, because I did a SWOT analysis, and so when I'm looking at risks, I realized in my past when I was successful, I had always surrounded myself with people smarter than me, right? Surrounded myself with successful people. And I realized I was all alone when I quit my job. They just promoted me to vice president of the firm. Like 2 months later, I quit. They're like, quit? What do you mean? Well, I want to become a full-time Forex trader. Right? But then I realized through this retreat that, well, being alone is a risk. So I started boot camp so I could surround myself with other successful people trying to figure out Forex. But anyways, so using the military analogy from the FX Bootcamp days, the number one goal when you're put into war, your number one goal isn't necessarily to win the entire war. Like today, let's win the war today, right? That's not really your goal. I mean, that's your overall objective, but it's so non-specific. Like you can't win the war. It requires a lot of things, right? So the next most important thing is you need to accomplish your mission. You've been given a mission. You have to complete your mission. If you complete your mission and that guy and them and them and them and them and them and them, then you're moving toward winning the war, right? You're beating the enemy. So, but it comes down to everyone must do their job, complete the mission. Well, even more than that, you personally, when you wake up in the morning and putting your boots on, you're like, I hope today I don't die. I hope I don't get shot or blown up or whatever, right? Isn't that the number one goal? So when I was thinking about business, I'm like, the number one most important thing is to survive. Live to trade another day. That means do not take crazy risks. Okay. The next part is capital acquisition. You know, if you do pull the trigger, you should expect to make money. You should not be surprised to make money. You should be surprised to lose money. You're like, how did I lose money, right? When you pull the trigger, the patience and discipline you put into your trade plan should dictate that you're going to make money, right? So there's a minimal acceptable performance for you to even take the trade. So for example, let's say you don't take trades you're absolutely certain you're going to make 50 pips or more on. Imagine that's your rule, part of your rules of engagement. If you are not absolutely certain in your mind that your trade plan will yield at least 50 pips, then you don't pull the trigger. Why? Because you might lose money if you're not certain. Why would you pull the trigger if you weren't certain you were going to make money? See, amateurs pull the trigger all the time, right? And sometimes they make money, sometimes they don't. Well, in this case, if you're a professional, when you pull the trigger, you're going to make money as far as you're concerned. All right, but now it's how do you manage the risk is really what I'm talking about. So your minimal acceptable performance, let's say, for a trade, the overall trade should yield 50. When do you move your stop to break even, right? And when do you move your stop to lock in a profit? Now, my minimal acceptable performance at that time, based on the analysis of my trading history at that time, was 15 pips. Every trade that I make had to make at least 15 pips, but not a target, guys, not a target. Your target's 50 pips or more, but you need to lock in a small profit on every trade. That's where the consistency comes in. Okay. That helps you lock in a small profit and over and over and over. So I think one of the first things I say in my book, or maybe not. No, I do the Art of War stuff, right? At some point, though, early in the book, I talk about an interview that Albert Einstein was in. And a reporter comes up because they're talking about quantum physics, right? The reporter asks Dr. Einstein, what is the most powerful force in the universe? Einstein leans forward and he says, compound interest. Compound interest. That's what it is. Little 15 pip winners over and over and over and over and over and over and over add up to something, right? That add little money to your account, right? Now, are you going to get filthy stinking rich on 15 pip winners? No, of course not. But remember, you're not trying to get 15 pips. You're locking in on almost every trade. Okay? What it ends up doing is paying for your losers. Every once in a while, you'll lose 50 pips. But you'll have 3 easy, small winners. So the thing is, if you're up 40 pips or 50 pips, and then it collapses on you, and your trade plan was 100, and you locked in 15 when you're up 45 or something, and then the whole trade collapses on you, hey, it happens. At least you made 15 pips. Okay? So it's not a stop loss, it's a stop profit. Okay? But over and over and over and over, this is important because you're taking risk off the table and you're putting a little bit of reward in your pocket every time. Okay? Like water over stone, it's a powerful force on your trading account, right? Because the water over stone means it doesn't destroy the stone instantly, right? What happens is the water in the river going over the rocks, over the boulders, over time, slowly over time, wears them smooth, wears over the sharp edges, gets them nice and round, then gets them flat, and eventually sand. Okay? I got a question here about leverage ratio and stuff. Can we talk about that, let's say, 9 o'clock? Because here's the agenda, guys. I'll go over the methodology. Then the news is going to come out. We'll trade the response, right? And then it'll quiet down for later. So then I can just field questions like, what should your leverage ratio be and all that kind of stuff. I can do that for hours. Okay? Namaste. So we'll do it later. Here's another great one from GM. Trade multiple time frames simultaneously is the point. Let's do this after the news. I'll have hours to go to answer those types of questions. I'm just getting you set up for the news, okay? Okay. So anyways, so once you have your minimal acceptable performance, remember, I'm not telling you to get out at 15. I'm telling you lock in 15. And once you got your 15 pips locked in, or whatever your minimal acceptable performance is, then you need to go for your big targets. This is where you need to let your winners run. So I mentioned earlier, you're not going to get filthy, stinking rich making 15 pips. Of course you're not. Lots and lots of little winners will pay for every so often you'll have a modest-sized loser. Pays for those. So you're kind of just a break-even trader. So where do you make your money? Letting your winners run. And instead of insult to injury, the icing on the cake is you're also collecting interest, usually depending on what you're trading, where you're going. Oh, yes. Okay, that's fine, Jim. I thought it was more of a question. Okay. Cool, man. Okay. You see, now letting the winners run gives you an opportunity to get filthy, stinking rich. Maybe still not quickly, but you need the winners. You need the big winners. You don't want to always just swing for the fences and the home runs only. But what I'm saying is have a trade plan. The trade plan should be good enough where you could actually make money. You know what I mean? Like if you're only a scalper, only trying to get 15 pips on trades, you can do well. You just have to work your beep off to be able to make money. And that means day and night forever. It's very difficult. And you have to be good all the time. And you also have to basically have some volatility too, right? Which is not always a given. So I like scalping, but to only do it, not so good, okay? You should put yourself into situations where you're trading with the trend. 100 pip winners, 200 pip winners, 300 pip winners. After that, I tend to take profit around 333. It's just my trades. I don't know why. It's something I haven't figured out in my own trading. But usually when I hit about 333, then I get a pretty significant retracement in the trend. So it's, you know, your 3-wave correction point. So that's probably after your 5-wave. I don't know. I'm not an LA wave guy. But, you know, I get to a point where the trend does exhaust, right? And to me, that usually happens because of my, let's say, my natural, like when I naturally enter into a new trend and then ride the trend out, I'm usually in about 300 pips from the top or wherever, you know, right? That's where I should bag some pips and then reanalyze during the correction, and then maybe you get back in again. So often it's like 300 pips, retracement, 300 pips, retracement, okay? So you need these 300 pip winners. Excuse me. Uh-oh, I'm super dehydrated. We're only 30 minutes in and I'm already losing my voice. Sorry. Okay, so anyways, you gotta, once your stop is locked in the small profit, just let it run, man. Get your bigger winners. At the end of the day, that's what's gonna make you big money. Do you know why? Because often what you can do is enter another trade. Once your stop loss is at break even, you're trading the house's money, right? You're trading the casino's money now because you can't lose money. So if you got stop loss protecting 15 pips, well, you have 15 pips profit, but you probably still got another 20 or 30 or 40 pips profit when you locked in. So now that's the casino's money kind of thing. You on the next pullback, enter another one, and then lock that at 15 pips, so on and so forth. And you can compound and pyramid. Throw your diamonds in the sky, baby. Yeah, pyramid up those trades. Okay. What that means is to build positions, to build a portfolio. Okay. Anyways, take a screenshot. Those. Okay. 5, take a screenshot. 4, take a screenshot. 3, take a screenshot. 2. Don't make me do it. 1, take a screenshot. Boom. Okay. Those are the setups. Let's talk about what that means. I'm going to tell you the squiggly lines and then we'll go into the methodology. Squiggly lines on my charts. The red one's 21, the blue one's 55. Okay. That tells me the direction of the market. That's medium term. What did the market do today? Does your spouse ever ask you that? Hey, so what was the market like today? The market was down. To me, that's what the market is. By definition, the direction of the 21.55. Okay. So the 21 is below the 55. By definition, technically speaking, the market's down. But that doesn't tell you much, right? Because the market could be, during the down day, price could be moving up. Even though the market's down, price could be moving up. So I thought about this. And I thought, that's very interesting. Back in the day when I was teaching myself how to trade, I'm like, that's very interesting, right? Because I used to use 20 and 60. Then I refined 21.55 because they're fib numbers. That worked too. And I said, okay, great. So that's my definition, the market, the direction. The market is bearish. Great. But then I said to myself, but even in bearish markets, prices move up. There's green candles and downtrends. And I thought, well, that's really an interesting phenomenon. So I'll call that market, and then I'll analyze price separately. And this was an epiphany to me. I should be a bear in a down market, but there are times when price is rising. I should not be short when price is rising, but I should get short when price starts to fall again. So I should separate the market from price, but try to coordinate price with the market. I want to trade with the market. So I said, I'll use a 5/8 5/8 moving averages. When the 5/8 crosses down in a down market, I should get short. And when the 5 crosses above the 8 in a down market, I should take profit. figured it out. In a down market, when the market's already down anyways, look, it was down the day before, right? This drop here is after the 21 was below the 55. The market preceded the price action. So I was already, so this, just assume this was like a 15-minute chart. This is the previous day. If this was 1 day's worth of price action, yesterday was bearish. So I was bearish here, 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 I was bearish here. Holy smokes! I was already bearish before the move down. The 5/8's the trigger. Look at that, guys. 1, 2, 3, 4, 5, 6 candles before the drop. Pachow. Lining up price action with market forces. Yeah, well, GM says then the next ones you would have lost money. Well, there are points, right, in the price action where you can get yourself in this braiding, right? But there's other things going on other high time frames that would probably tell you this. Also, if I throw down a pivot point, that's also probably predictable, okay? But you're right. When you get this, this is called braiding, and you should not be trading, okay? But check this out. It's not surprising as well. See how you're retracing back to these moving averages? Okay? You know what's predicting this? Oscillators. In particular, your MACD. Your Miggity MACD. Okay? So I use them as well. Let me get to that point. Another part here is the 200 EMA. That's the fair market value. Sometimes when you get too far away from the bow, it snaps back, right? So the market gets too bearish here and drifts back to the fair market value where where bulls and bears agree. So in this case, there are more bears than bulls, but that doesn't last forever. Yes, Johnson, what's going on? Yeah. Oh, there was a question about, oh, you print screen. Oh, so you know what these are. Okay, momentum, 5/8. Right? That's what I said, take a screen. So that's the 200 EMA. Okay. Those are Bollinger Bands. I don't really use them anymore. And it's funny, I mean, I do, but I don't. The funny thing is, the experts I hear using them use them differently than John Bollinger, who invented them. So I read some old John Bollinger stuff, and then later on, you used to hear things like, "Oh, ride the bands! You're supposed to ride the bands." And all of a sudden, there were all these experts talking about how to ride the bands and stuff. And then later on, there was another John Bollinger like interview or something, and he's like, "I never said that." I never said that. That's other people making stuff up. So anyways, what they tell you, let me just go back. I kind of use them as like a volume indicator. Okay. I know some you know, I know MT4 has a volume on there, and I'm honestly not even sure how they get that volume data, because the market, we don't trade on an exchange. We trade in the intermarket. So the Bollinger Bands are reacting to price, right? And so to me, when they're wide apart, there's high volume. And then when they're narrow, tunneling like this, there's very, very low volume. And it's trading on price, not actually volume, but it would be inclusive of all market participants, not just at your brokers or whatever, right? Or let's say your broker's using from their liquidity providers, but they don't have all liquidity providers, right? So like, what is the volume data? So anyways, whatever, it doesn't matter. And you could probably tell me that was fixed years ago, but I just don't use it, right? So anyway, so this to me is a better volume indicator because it's based on price and not actually volume. It's a substitute. So that's what the charts look like. Then throw down some Bollinger or oscillators. Here there's a MACD. Remember this big drop and then the braiding? The MACD is diverging. And that's the clue that you shouldn't be trading these. Okay? And then the oscillator gives me overbought and oversold conditions for price. The MACD gives me overbought and oversold conditions for market. Okay? Remember price? Oops. Okay, that's the market. That's price. This is the market. This is price. Right? I separate price and market. GM says they lag. Yes. Okay, I don't know which ones you're talking about. Your Bollinger Bands lag for sure. Moving averages lag. Oscillators lag. Would you like to have some leading indicators, GM? So that's what the chart looks like altogether. Looks like a lot of lines. They're not, because I'm looking for very specific things in the moment. So like the 21's below the 55 to the left that we can't see, but you can, right? Clearly the 21's below the 55, and it was at the beginning of the day. So yesterday, I was a bear yesterday, right? Okay, I was a bear yesterday. So what am I waiting for now? If I'm already a bear, yeah, you got it, GM, fibs and pivots. If I was a bear yesterday, I'm probably a bear today. If it was sunny yesterday, it's probably going to be sunny today, right? Not always, but probably be a lot like yesterday. So yesterday I was a bear. Today I'm probably going to be a bear. So I'm looking for a 5A cross down. 5A cross down, boom! 5A cross up, take profit. Okay? Now, what I was saying here, at this point in the MACD, there's a diminishing distance between these two moving averages, which tells me that the bearish market is slowing down. Okay? Another way of saying that is I'm bearish, but I'm a lot less aggressive. It's very important. Okay? I was aggressive here, not aggressive here. So on and so forth. All right, so what time is it? What time is it? All right. So what are we expecting for a headline number? Anybody? Hey, look, there's me! Oh my gosh, there's me! So what are they saying, the headline number? Eh? Yeah, wages are going to be important, sure. Hello? Is anyone looking it up? What does the market say? 200. Okay, have you read the FX Street guide to non-farm payrolls? Well, Ryan says last month was 261, but the month before was lame, right? So you get the lame number from the hurricanes and then the overexpression. All right, so I think it'd be somewhere in between the normal. All right, but whatever. Johnson says, so extreme buy, right? I didn't say that. Now, first of all, I think only a fool guesses and gambles on such events. So it's important what we're looking at. You know, we already know the trend. I mean, we already know the trend. The trend is pretty good, okay? But what we're looking for now is wage growth, because then that starts to predict things like inflation. Okay? And inflation, you can see through PCE. More traditionally, it's looked at through CPI. You could also look at GDP, right? Thank you, moderator. Do it here. Okay, so this is important for macroeconomics, because then it helps us understand things like if there's inflation. So let's put it like, if there's a shortage of labor, right? Well, how about this? What are the components of long-run productivity or long-run GDP? What are the building blocks? You have labor, you have capital, and you have technological improvements. They thought, oh, look at that, boom. They thought at one point it was just capital and labor, but they found out the most important thing was technological change. So that the models changed in around, what, the 1960s? But back in the day, you remember, if you go back to like what Karl Marx, I guess is what I think of. I don't know about you, but when I think of Karl Marx, when I'm thinking of labor versus, labor and capital, right? But whatever. So Adam says, all right, so if there's a shortage of labor, then what happens is you have to pay your employees more to attract them from somebody else's, right? That you have to say, don't work at that factory, work at my factory. I will pay you more money than that factory owner pays you. And then, so whatever. And so I have to attract employees by paying them more money, giving them better benefits and all that kind of stuff, right? Yes, there's the 200. Thank you. Okay, so, are we at that point, right? So if there's also increase in wages, then what happens? Then there's increased demand for everything in the economy. Now we're talking short run. Long run versus short run. I feel like I need to draw. I don't have a drawing tool though, do I? It's really too bad. It's too bad this software doesn't give you a drawing tool. Too bad. I was going to bust it all out, long run, short run, supply and demand, all that kind of stuff. But anyways, what it does is it creates an inflationary gap, and then you can use either fiscal or monetary policy to close the gap. The Fed would use, in that case, monetary policy. They would raise interest rates. They would enter the market through open market operations and raise rates. Okay? And that over time, again, now going back to the long run, in the long run, inflation should come back down with high interest rates. Use some pen and paper, and then what? Hold it to the camera? No, I'm not going to do it. But anyways, you have to trust me. I could do it. I mean, I could do it. I don't know. It'd be weird to hold it now. Forget it. I probably could use paint. I don't have time for this, do I? Paint. Let's see if it works. Okay. What are we talking about? Prices and quantity demanded in the marketplace. All right. So this is, let's say, how would I do this? Okay, so this is long run productivity of the economy, and we should be at equilibrium. I got to change color somehow. This is going to be long run demand, or short-term demand, short-term supply. And then what happens though is you get this inflationary gap where everyone's making more money, okay? And demand for all goods increases to demand 2, right? So let's map this out. Ooh, demand 2 should be here, right? So if everyone has more money because wages are going up, then everyone starts buying some more things, right? Because now we're talking about consumption, right? The marginal propensity to consume, right? So consumption goes up, which increases GDP and all this kind of stuff, right? So anyways, the old equilibrium price is here. Here's price, here's quantity. But now demand increases with the increase of wages. So now the quantity demanded goes up, because this is a shift up, and price is here. This is P2. And this, okay, this is the long run. The long run suggests our maximum output for this economy should be here. Oops. But we're here. So this from Q1 to Q2 is an inflationary gap. An IG, an inflationary gap. You have inflation. Your economy's too hot. So look what happened to prices. Now prices are going up. You see what I mean? So now the government, either through monetary policy, right, or through fiscal policy. Fiscal means like to cool the economy, you could jack up taxes, for example. Or to cool the economy, you could jack up interest rates. Now, if you jack up interest rates, then that affects the dollar and will affect net exports and stuff, right? But what if to cool off the economy, you didn't use monetary policy, you didn't raise interest rates, but the government jacked up taxes? That would also cool the economy, but without increasing the value of the dollar. So it's, you know what I mean? So that's why there's 2 different ways of handling this. The problem that I think economists have right now is the economy is doing well, so why would you lower taxes? They're like, wait, the problem with this now is, okay, what's the marginal? Can I draw over here? No, I can't draw over here. So how do I do this? How do I clear this? I guess do a new one, right? Okay, the marginal propensity to consume is what? Your income. We'll do this. Income is I. Your income minus taxes, right? And minus plus I don't want to do transfer payments and stuff, right? Right? So this is a function of how much money are you making and how much taxes. So if the government lowers taxes, you have more money to spend, right? And therefore, you have more money to consume things. So now that demand curve, so here's long run, right? Here's the old equilibrium point. Oops, terrible. Can I go back? This is terrible. Okay, so we shifted the demand curve, D1 to D2, 1 to D2. You following me? I probably did this too fast. So right, here's the new equilibrium. So if now, so this is what we've kind of done, but it's not true. Let me back this up. In recent history, what happened? We were here, right? Right? We had a recessionary gap. So now the Fed used monetary policy to increase demand to move us back to equilibrium, long-term, long-run productivity, right? So they closed the inflationary gap or the recessionary gap using monetary policy. So we're back to where we should be on the long run. But now the government, in all its wisdom, is going to what? Lower taxes, increase consumption, increase demand, and move us out of equilibrium again. We're just on the other way now. Like, we don't need help. The Fed's raising interest rates. Why do we need a tax break? Like, why didn't Obama do that? You know what I mean? Why didn't Obama do fiscal? Instead, the Fed had to do everything. And by the way, I'm not political. I'm not saying it because, you know, I'm Republican and I hate Democrats. I'm Canadian. I hate everybody. Right? So anyways, we don't need it now. So now we're going to have an inflationary gap. We don't need a tax break. Everyone's making money. So anyways, whatever. Time to do our intro to the scalp. So anyways, there's your long run, short run economics, creating inflationary and recessionary gaps using fiscal and monetary policy to get back to long run equilibria. Hope you appreciated that. Namaste. Yeah. Well, I was going back to the politics side when George Bush was still involved, and we had Paulson, Hank Paulson, running the Treasury. We had Geithner, you know, running around. That was so bad. That was so bad. The government was impotent. And Ben Bernanke, in my opinion, did an amazing job coordinating the responses of all major central banks around the world to act together. I mean, that kind of stuff has never happened before that I know of. Okay. Adam says, why has the dollar been moving down even though interest rates are going up? Yeah, so if you go to a university and they teach you how to do this, teach you economics, they're not traders. Okay, they're talking about long run stuff, and you're talking about short run stuff. Long run isn't what happened this year. Okay, so anyways, the answer is it's because it's relative, Adam. Relative to a couple of things. What other central banks are doing, but more importantly, what other central banks are expected to do and what our central bank was expected to do. So back when the dollar got really strong because of interest rates hadn't even started rising yet. The Fed hadn't even raised their first interest rate hike yet. It was before all of that. It was expected they were going to raise 4 times, and I think it only went once. So what happened was the market priced in 4. Then the Fed said, well, maybe we don't need 4, we need 3. Dollar falls. Well, maybe we don't need 3, we need to have 2. Dollar falls. Now they're raising interest rates, but it was expected that they would do it 4 times in a year, and I think that first time we only got 2. So it was overvalued. Okay? It had already gone up. So it's not that when the interest rate's going up, it attracts more. It's when the interest rates are expected to go up that it starts attracting money. And then when it doesn't go up, then it's overpriced. Right? And so one way to really pay attention to this, Adam, is through the Fed funds futures market and just watch how the percentages change. 82% chance interest rates are going to go up, and all of a sudden only 79%. Well, what changed? The expectation for the future changed. And when you're doing economics, expectations, what you expect your income to be next year. Let's say you have a really good job and you're rich today, but you know in 2 months you lose your job. Okay? It will actually change your marginal propensity to consume. Not because if you say, well, my marginal propensity to consume is a function of income and taxes. You say, well, it's an expected income. Not your actual income. What's more important is your expected income. Because let's say you make $100,000 a year this year, but your rich uncle, your rich uncle is sick. And you're like, I'm going to start buying TVs now because he's going to kick the bucket and leave me money. You expect to have more money in the future, and this gives you a positive outlook, and you go out and you buy giant TVs like a poor person would. Anyways, we got to go. Okay, so I'm going to bust out a 1 minute candle, chart. We'll probably use Euro or something, I don't know. But here's what we're going to do, a high volatility event-driven strategy. I've published this already on FX Street. There are 2 strategies. One, a high volatility event-driven strategy, the one we're going to use now. The second one is a counter-trend trade medium-term strategy. Both have been published, I don't know, 3 years ago at FX Street. And you should already know what the numbers are likely to be, because in that article, I also teach you how to build a model to predict the headline number for non-farm payrolls. There is lots of information, and FX Street has published an entire tool for you to do that now. So you are an expert, so I don't need to give you that. Okay? So anyways, event-driven, high volatility event-driven strategy means the number's going to come out, the market's going to move. We are not going to trade instantly. Okay? Because I'm not here to guess. I don't care. So here's what we're going to do. If the market goes bullish, you'll see green candles. Great. I'm not going to trade yet. All I'm going to do is watch it go up for a few minutes. No, sometimes you can catch it in the first 30 seconds. You can try that. Okay? But what I'd rather you do is wait 2 or 3, 4 minutes, and then there'll be a retracement. The green candles only tell you to buy. Not instantly, I shouldn't say that. Tell you that the market's response is bullish, and if the market is bullish, you want to buy. But you don't buy high, you buy low. So what we're looking for is retracements into roll reversals, into fib zones and stuff. So I would like us to consider trading in the direction of the market somewhere between the 382 and 618 Fibonacci retracement. If you get a move down in here, you go long. You can't sell in this strategy. Okay? The rules of engagement are if you get green candles, you're a bull. Then we want a retracement, then you buy, ideally somewhere between the 382 and 618, and then you put your stop just below the lowest low pre-news. So in this situation, you're risking about 15 pips. And the reality came a little lower, but held at the 786, held at the 786, held at the 786, and moved its way up. So now we're getting close to this line in the sand, the previous high. This is your risk zone. Okay? This is your risk zone. If it's going to fail here, kind of like double top, if you will, and move down and knock you out. So at this point, you move your stop to break even. Since you're long in here, your break even's probably pretty close to this move. And you want to be hero or zero by the time you're challenging the front line here. And if it double tops and drops, you lose nothing because you're at break even. And if it breaks, you get paid. Boom. So again, you should be, okay, you should price, how do I say this? If you longed it in here, it should only be 3 or 4 minutes later and you should already be profitable. Okay? And then when you bust through here, when you challenge the line, you should already have your stop at break even. If 10 minutes goes by and you're not profitable, you should probably get out of the trade. Okay? You got that? So, what chart would you like to do? Euro USD? Let me check this. We got weekly. Oh, look at this. We got the weekly and the monthly all jammed. Holy smokes. We are at support, guys. Holy smokes. Well, we're at weekly support. We're also at monthly support. If you're a bullish swing trader, you are thinking about going long in here. Not now, but you're hoping the response to NFP is bullish, pro-euro, anti-dollar, and you would plan on being long the rest of the month of December. Listen to me. If you are a swing trader, you're hoping it goes up here, and if it does, you're going to try to get in and stay long the rest of the month of December. So you're going to scalp into your long-term swing. If you don't know how to swing trade, go to fxbootcamp.com, pay money, and you get about 10 hours worth of training on swing trading. You got to learn somehow. How much time do we have? There, that should be it, right? What's our number? Look at the support. It's crazy good, right? Oops, I was a little slow in that one. Sorry. I was trying to get Trade the News going so I can...
3%. Weekly hours rising 1/10 to 34.5. Participation rate at 62.7 is unchanged from the prior. So
sorry
Canada
guys, I tried to pull it in for
85%
too, but I'm doing something else in another window.
84.3% prior.
Sorry, I was so late.
Earth debt minus 5,000 compared to the prior 216,000, so a good beat there on the headline payrolls.
Non-farm payrolls headline better than expected, but back month revised down nearly 20,000.
That makes
Unemployment
sense.
in line at 4.1%.
That makes sense. So 228 last month was revised down, but we knew that number was hot anyways. Just like the month before was cold, we knew neither of them were accurate, so that makes I have no problem with that downward revision. 228 is a solid number though. So I'm trying to get information on wages. Manufacturing added 31,000 jobs.
Initial reaction in the U.S. markets is pretty muted. Equities remain on firmer footing. The bond markets have seen a slight bid. The 10-year back to unchanged. The 2-year up slightly on the day. The yield holding back below 1.8%. In markets overall, reaction pretty muted with the dollar a little bit softer as bonds firm 117.47. We did see a beat on the headline non-farm payrolls, but the average hourly earnings were up, but not as much as expected, and the unemployment rate held at 4.1%. Weekly hours were up 1/10, a tenth higher than expected as well.
So it's one of these, slightly okay days. 228. I don't know about these average earnings. They don't seem to be that major. So it was okay. I mean, it was okay. Let me get the chat room coming back. Okay. You could probably put another one here on the 618. Okay. And that's it. So we'll see where that goes. Looking at the next move, you want to plan the same idea on a 5-minute chart now. So on a 5-minute chart, we should get like 4 or 5 candles. Let's say it keeps going north, and then it'll come back, and then and then like that. Okay. Now, like I said, if you are a swing trader, this is definitely a buy zone for you. Definitely a buy zone. The buy zone is actually this gray box. So if you can buy it off this gray box, another way of saying it is maybe your stop is actually, maybe your stop is like down here. If you can stay above this gray box, you'll probably be long for the rest of the month of December. Isn't that neat? So I need to go to a higher time frame. Let's go to a 4-hour. If you're a swing trader and you get this, the actual target is 121.34.5. Isn't that sweet? I got to kill that. Oh, I guess I'll do that too. So if you can stay long as a swing trader, if you're a swing trader, if you are bullish on the euro dollar, I'm not telling you you should be, but if you are, then your target is way up here, man. Okay. Isn't that neat? So you're going from basically 117.50 to 121.50. Okay, it looks like it's gone a little lower than I would have liked, huh? So it looks like the scalp has failed, but the swing might be alive. Who knows? The scalp has failed, though. You see that? I think we've made 100% retracement now. That's not good. So the scalp is dead, but I wonder if we can catch the swing. So let me go to a smaller time frame now. Yeah, look at that. That's a disaster. This is a buy right there. So I'm down like 15, maybe close to 20 pips. It's not the end of the world. I'll survive. Carlos is taking it down to 1670. Why 1670? Let me try to check that. Yeah, why 1670? Is that a daily pivot or something? Or is this it? That's 1650. Yeah, Carlos, what do you have at 1670? What's going on, brother? 1670. You must be using a daily or something. I wouldn't use a daily on this, but Okay. Okay, it stopped dropping. Do you think it's a coincidence that we're on the S2? That's S2 right there. Yeah. So we'll see if this holds. If this doesn't hold, then you take a breath. Cool. So what else are you guys watching for this scalp? What else is going on? What's your interest? Like, for example, oil. Okay, we're breaking through a bear zone here. If we could stick oil here above this gray area, then the market will probably return to bullishness again. I wonder if a zigzag will help. Insert, indicators, custom, zigzag. Depth deviation. Okay. So is this an expansionary wave? Oh, weekly S3. Okay, yeah, I don't use S3s or R3s. I mean, I guess I could, I should, but the number of situations that they play a part of is pretty minimal. So usually at that point, I'm not using weekly. So if I'm above weekly R2 or below weekly S2, then I switch over to monthly pivots. Okay? So what are you guys trading? Look, we're back above here. So I'm still, right? I'm still alive on this one. It's a 382 entry, so yeah, it's aggressive entry, but conservative stop. What's your poison, guys? What are you trading? If WTI goes up, that should be good for CAD. Look at gold. See? Wow. So I was traveling last week. I didn't see the break of the trend. Whoa. Look at that. I wasn't aware of that. Oh. Yeah, I wasn't aware of that move. Holy smokes. Look at that. Gee whiz, Batman. So we are on the monthly S2. That would be stop trading. That's a stop trading zone. If you were a bull, you'd be watching this for an opportunity to go long. So it just comes down to what's your trigger. Okay? But even though this has fallen for the last 2 weeks straight, that's a buy zone. There's not many. Sell pound Aussie. Why has Aussie gone bullish? Aussie was pretty bearish. Look at this. Look at this recovery in gold. I told you. I told you. I told you. I told you. Look at that. That should be dollar weakness, guys. That should be dollar weakness. Holy crap, I told you. Look at that. Gee whiz. Yeah, there's my trade. I'm going to make money. Bum, bum, ba-dum, bum, bum, bum. Move my stop a little closer. Boom. So I got to draw the line in the sand. Remember that whole thing? That's the line. So as I approach that, see, I entered on a 382 though, but anyways. Gonna move my stop a little closer. All right. Lit that like a rocket. All right. Oh yeah, CAD should be doing well. Look at that. Look at Canadian dollar. Well, that's not going to work. I don't know why, but anyways, there we are. That's the Canadian dollar, eh? So let's take a look around the world. I want to look at the yens. Okay. As you can see, I'm long on this pair at this price level with my stop at break even. So I'm long euro yen. We'll look at USD yen. I'm long USD yen at this level and my stop loss is at break even. I'm long Aussie yen at this price. My stop is not at break even. Here's CAD yen. Let's get rid of this gray zone. I don't even remember why that's there. Okay, I'll delete that. Okay, let's go back to like a 15-minute chart. I am long CAD yen at this price level and my stop loss is at break even. And Kiwi yen. Let's go to a 15-minute chart. I am long Kiwi yen at this price and my stop is at break even. Cool. So what do you think? How am I doing? By the way, this is what I was doing when I was traveling. So Daniel and I were having breakfast on Wednesday. And I'm like, hey Daniel, I'm up 113 pips. He's like, oh, that's really good. And then he's like, on what pair? And I said, I'm 7 pairs. And he's like, what did you just say? I'm like, I think I'm actually on 7 different pairs. He's like, so that like 20 pips each. And I'm like, yeah, but you don't have to kill. You don't have to kill my buzz. You don't have to kill my high. Sure, it's breakfast and I'm up 120 pips. Who cares if it's 7 trades or 6 trades, right? Like, don't kill it, man. Come on, it's 120 pips. So now it's 500 pips, but anyways. That's what I do when I'm traveling. I'm not sure what you do, but that's what I do. Cool, right? Because that's me. I'm long at Yeah, it's about 500 pips. Kiwi Swissy. All right, or not kiwi, a pound, right? You want to do pissy? I'll do pissy. John's like, well. So I don't know if you heard earlier, but yesterday was a 34-hour day for me. I got on a plane in Singapore on Thursday morning, traveled for 31.5 hours, and got home on Thursday, the same day. I traveled for 34 hours and got home the same day. So yeah, that long day. But I was at the Raffles Hotel. How awesome was that? So the butler walks you to your room, and I'm like, "So you're really my butler?" "Yes, sir." "Okay, good." Butler walks away, leaves me in my room, and within like 5 minutes, I hit the button for the butler. Like 5 times. The butler comes running back to the door. "Yes, sir. Yes, sir." I'm like, "Are you really my butler?" "Yes, sir." I'm like, "All right, I have a task for you. I want a Monte Cristo number 2. Okay, I'll go find one for you." And then I'm like, and then shine these shoes. "Oh, and shine these shoes." And I slip off my shoes. "And then shine these shoes too." 3 pairs of shoes. "And hurry up with that cigar." Yeah. So Matt, up on gold long. Yeah, you're a little slow on that, bro. We already did that. All right, so let's take a look at pound Swissy. Pound Swissy, let me clean this up. I had this as a buy, right? Can you see this? Right? If you're a bull, we're approaching a buy zone now. But it came off of a sell zone, which tells me it's going to double top and drop. So this is probably what's going to happen today. Next week is all bets are off. This is what it tells me. Remember, it's not my prediction. It's just technical analysis. Right? I'm like a concert pianist. I didn't write Mozart, but if you give me the sheet music, I can play it perfectly. That, I'm not telling you it's going to do that, but that's what the technical analysis tells me. So there you go. That's what the technical analysis says. Okay? Roll reversal, long into here, probably not even that high. Probably more like that. Okay, is what I would expect. Okay? So you could be short-term short, long-term long, or just scalp it off of here, whatever you want. Buy dollar CAD. Okay, I've been away for a while and doing a lot of traveling. I haven't been watching the charts. Okay, so I'll give you that part. All right, but I don't like that, John. I'm bearish on the US dollar and I'm bullish on the Canadian dollar. It has more to do with macroeconomics and a drawdown in supply. Okay. And I expect a drawdown in supply until about probably February would be my guess. And that would be more bullish on oil than bearish. And that would be more bullish on Canadian dollar than bearish. Okay? So that's just my point of view. And one of the reasons why I'm short the yens and long CAD yen specifically. Okay, But I might be wrong. Like I need to do some time. I need to spend some time doing some analysis. So like I said yesterday, I was traveling, so I haven't done my analysis. So this is a cold start. I said it right from the beginning. So maybe I'm wrong. I need to preface that. I haven't done my analysis in a while, but you know, fundamentals don't change that much. So I'm more bullish than bearish on crude right now. Not based on what you see on the chart. See, the chart just tells me prices where I should buy and take profit. Okay? But this monthly M2, weekly S2, that's such an obvious buy if you're a bull. Like if you're a bull and you didn't see that, then you're blind. Now you might be a bull, but you suck at technical analysis, which is fine. You're trading blind. But that's a bullish cluster, like the euro dollar one too. Remember how I'm like, oh, look at that support, right? So in any case, if this is going up now, I don't know. I'm not expecting it to go to 80 or anything like that, but that is a buy zone. So if that goes up, USD CAD should go down. So right. So whoever said, oh yeah, John said maybe buy around there, and I'm like, well, even if you see it, or even if I saw that, it wouldn't be something that I need to do. Okay. Okay, now we should be getting our 5-minute retracement soon, or maybe now. So I have a choice. Leave my stop there. I'm risking, what is it, 10 pips or something? 15 pips? Or jam the stop, but why would I jam the stop? So I don't have enough profit to jam the stop quite yet. Now, if it starts moving again, yeah, I guess if we're up here, I'm going to jam my stop. So I'm trying to add up the pips here. 94, 65, 14, 60, 11. So was that 1, 2, 350. I think it's more like 400 pips, but anyways. Not bad for being on an airplane, huh? Funny thing is, I think I haven't really made any new money off of NFP except for this little scalp, which is nothing, right? The yens didn't actually move much at all after NFP. Can you imagine? It was, what was it, 30 degrees in Singapore? And now I'm at 0 degrees? I'm like, oh, man. All right, so this one's moving. All right, so just to follow my rules of engagement, I'm going to move it to break even. So now I can't lose money on our scalp. Cool. So it's weird though to get to Singapore, wake up in the morning, like, oh, I'm going to go out to the pool. I go outside, I'm like, oh, it's hot. It's 8 o'clock in the morning. It's hot. Nice. All right, so 2 guys are already smoking cigars? Albert, what you smoking? Te amo? Okay, I'm just kind of watching, looking. If you have questions, feel free. I think we're getting close to open mic night. It's almost 9. Where's my FX Street? All right, let's go back to FX Street. You are the 1, 2, 3, 4, 5. Only been you. There, okay, let's go. So anyways, thank you guys for being here. This is my 140th webinar for Non-Farm Payrolls Live. Just this one webinar. This is my 140th. It's very good to see you guys here. If I've earned your loyalty and respect, then please visit tradersway.com and at least open a demo account. Give us a chance to earn your business. Check out our execution speed. It's fast. I've seen third-party analysis. We're fast, much faster than most of the big boys. Our spreads are very competitive, but we have world-class customer service. And you can hang out with me every single day for free as a client. You can come to webinars with me every day. It'd be nice to see you over there at Traders Way. And then you can throw your diamonds in the sky. Hope to see you. Hope to see you on Monday. If you're a client, demo or live, you can attend the daily webinar with me, and I'll see you on Monday. So I'm just checking out here. All right, so there's no news today at 10. All right, cool. So yeah, we have the Commitment of Traders report coming out later today. Baker Hughes rig counts coming out later today. Consumer Sentiment Index, couldn't care less about that. So all right, so we're on the free and clear. Yeah. Two good trades and done for the day, huh? 2 and done and on to the next one. Very good, guys. Hey, Albert, not a problem. So, hey, Albert, where are you from? I think I know the answer to this, but there are a few Alberts in the world, maybe not like you. Sweden? I am Swedish. I am Swedish, yeah. My name is Albert. I'm from Sweden. Yes, I thought so, Albert. Should I show the gift you sent me? Oh, I've been away since then, but I'm from Sweden. Don't fall, don't fall. Oh. Thank you very much. Surgeon General warning. That's good. So thank you very much. Really appreciate it, Albert. Let me tell you, it smells like tobacco and cedar. It's a wonderful smell. Ah. Ah ha 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 ha. So it's been sitting in the humidor, what, 2 weeks maybe? Ha ha ha. So thank you very much, Albert. So you've been following my NFPs for a year and a bit, huh? That's really cool. Has anyone been to nearly 100 or roughly 100 of the 140? Let's say, how many people have been to 70 or more of the 140 that I've done? Alexander. Well, Alexander, you're going to die anyway, so what does it matter? Does the double top weekly M3, does it count as C in prices? Okay, let's go to that. Pig dollar. And you're looking at what? What weekly M3? Bro, where are you? Okay, this one. Okay. Does it count seen as wrong? What do you mean, does it count? You guys are so funny on like, so mechanical. What do you mean, does it count? Of course it counts. See, one message I try to get across to people is you should not look to your charts for answers. You don't say, like, does this mean I'm bearish? You should already know if you're bearish. Okay? So, if you are a bear, you would have sold here. Okay? And if you are a bear, you would have sold here. That's all there is to it. If you're a bear, you would have sold, or you would have sold this and left your stop, let's say, up here. Either way, you're short. There's no other question, right? This is just absolutely, completely obvious in your face, okay? If you are already a bear, you sell. And you put your stop above resistance, right? Weekly M3, monthly M3. It also means that you sell there, but you're probably short, that your target is down here, in fact. So you could have shorted on Monday, put your stop here, and you're still short, and you'll probably be short all of next week too. Well, thank you guys for those who have attended many of these webinars. I appreciate that. Thank you. Now, your short-term target should be here, which the reason it bottomed out where it did is because I already marked it the week before, 2 weeks ago, 3 weeks ago. We have this as support. So it came down to support and bounced. Another way of looking at that is, let's move here. Another way of looking at that is if you are a bull, this is a buy zone. You'll say, Wayne, you're only saying that because it went up. No, I'm not. This goes back weeks, this gray zone, weeks. Like 2 months. That is a buy zone. It has been for weeks and weeks and weeks and weeks and weeks. It made a higher high, retraces back to a higher low. What pivot point does a bull buy? This one. which is just 2 shakes of a lamb's tail away from our support anyways. And then you throw down what? A fib? Okay? Using fibs, this 618 is your buy. So there's a buy zone, there's a buy zone, there's a buy zone, there's a buy zone, there's support, 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 786. I mean, this whole area. Now I got to use the ellipse shapes. I'll do triangle. From here to here to here. It's a ginormous, in-your-face buy. If you are a bull, that is so sickening obvious that it's going to go up, that's where you buy. Now, do you know it's going to go up? No, I don't know if it's going to go up, but I know that that's support, and if I'm a bull, that's my job. If you're doing something other than that, you're just not trading currencies. You're hallucinating or something, right? I mean, you could do it up here, but you don't have as much support. Let me try to, I'm trying to straighten into this a little bit, but anyways, it's supposed to be narrow. There's just so much going on here, I can't grab it. Okay, now, conversely, if you're a bear, I mean, what else is there besides weekly M3, monthly M3, double or triple top? I mean, oh my God, you're a bear, but that wasn't good enough for you? Like, what was it that you were doing? Right? Now you're scratching your head like, but Wayne, I don't know which one to be. Well, you're supposed to do long-term technical analysis and fundamental analysis to discern whether you are a bull or a bear. Now, I told everyone at Trader's Way, based on our technical analysis of gold, what was it, 4 weeks ago, 5 weeks ago, that the US dollar should weaken. So we've been long things like pound dollar, euro dollar. But we saw that before any technical analysis said to buy. I just said, oh, based on my analysis of the gold market, I think the US dollar is going to weaken. Right? WT is coming off now? All right. So, so it's one of these things where if you do your analysis, you should become a bull or a bear in whatever market, and then you open your charts and do technical analysis to say, well, if I'm a bull, I would buy at this level or this level. Okay? If you are a bear, you'd say, well, I would sell at this price or that price. Why? Oh, because of the moving averages or price action or pivot points or whatever. Now, pivot points are leading indicators. I don't know. I got a question here about Bitcoin and cryptos. I don't know anything about that. Okay, I don't know anything about that. I like money. So I don't know. Okay, so I don't know. I don't know if I was a little too in your face, but I'm trying to make a point here because I might not see many of you on Monday. If you want to trade with me on Monday, open a live or demo account at tradersway.com. Demo account takes maybe 30 seconds to set up. Okay, it's the future. It's the future. Bitcoin's whatever. Fine, great. My present's pretty good, so I don't need to switch. Okay, so what I was trying to say though is I don't know how much time, so sometimes I have to do this, slap you around and get your emotions going, and then I can speak to your emotional side. Because if I only speak to your intellect, here's what happens. You say, oh, that makes sense. That makes sense. I see it. It makes sense. I get it. It makes sense. And then you start trading on your own, and you're like, I don't know what to do anymore. I don't know what to do anymore. And then you come back, you're like, Wayne, you make it look so easy. It's because I have a plan. It's easy when you make decisions. Your charts don't have answers. Your charts tell you price and time. It's a complete figment of your imagination. These colors are just algorithms that paint lines and stuff. It's just math that paints lines. It's an abstract view of the interbanking system buying and selling currency pairs. Your job is to do analysis of the market, ideally fundamentally. You do things like macroeconomics, so you could say based on the economic data that the Federal Reserve Bank of the United States is reviewing, they will probably raise interest rates 3 times next year, and therefore that would attract investment relative to other economies, and that could strengthen the dollar relative to the economies that are not raising versus others or whatever. And then you say, because of all that, you are bullish on the US dollar. Okay, I'm not saying that that's what I'm saying, but I'm saying you actually did analysis. And you have an opinion. You came to a conclusion. Right? This is not like an undergrad paper where you just write 900 words and send it to your professor. No. You need a conclusion. All right? You've done the analysis. What analysis did you do? I did macroeconomic analysis. I looked at policy. I looked at economic data. I looked at the potential policy changes, if any. And then I looked at how this affected things, money flow, global money flow, the net export stuff. Is Australia exporting? Is China exporting? Is the United States importing? Is Europe importing? Right? Is money going here? Is money going there? Right? And you can track all of this. And you say, well, this economy is doing well. This one's not doing well. All this kind of stuff. And you've done the analysis and you came up with a conclusion. I want to buy euros because of X, Y, and Z conclusions based on the analysis that I have done. Okay, now you're the big shot. My analysis tells me I should buy euro. Good, now you're the big boss, you're the expert. People, and if you write a lot, people are willing to pay you money for your analysis, your opinion. They don't care about your analysis, actually. They care about your conclusion. And if your conclusion's right, you get paid. Right? If you get paid, you get. So then on that, let's say I was bullish on euro. I would do something like, all right, euro yen. Okay? I would do something like, because I'm bullish on euro yen, let's go to a 4-hour chart. Okay? For example, you say, well, higher high, higher low, higher high, higher low, higher high. Well, hopefully higher high, right? So based on your analysis, no, I don't have pivots here. You know what I should do? I should insert this one here as well. Okay. Let's do the zigzag. Okay? Then you should be buying dips, right? So hopefully this on this time frame, just let me extend this. Okay. This looks pretty bad though, doesn't it? Okay, and that's the plan, Stan. Let's change templates now, even though I just did this template. So once you've done your analysis, then you look for prices in which you would like to enter based on your conclusions. Okay? Can you, as a technical analyst, figure out why I bought the euro yen? You can see where I entered. Can you see? Oh, weekly M2, monthly M2. Is that a place where a bull should buy? Yes. Do you know when I said that? Do you know when I came to the conclusion I should be a buyer down there? Up here. Did you know that? I said things like, oh, buy at the pivot cluster. See, I don't necessarily, this chart tells me price and time. I don't know when or if it's going to come down and hit this price. But I know that if at that price, I would buy euro yen. Now, why would I know that? Because I already know I'm a bull. Now, I can also tell you if I'm a bear, this would have been a sell zone. Absolutely, completely, incredibly obvious. Like there's no argument. I'm trying to get you to that point, guys. Like there's no doubt. Now the doubt is whether it goes up or down. I don't know what the future is any more than you do. But I know if I'm a bear, you sell there. And on a Monday morning, you're at a weekly M3, monthly M3. Like that's so sickening obvious as a bear to sell that. I mean, what else were you looking for? I mean, and I'm not trying to be a smarty pants. I'm telling you, if you know technical analysis, oh my God, right there. That's what that is. But you don't know it ahead of time. So you have to have a predisposition, what we call a bias, an opinion based on your analysis. Okay? I'm not telling you, oh, because we hit the red zone, that means you should sell. No. You're reacting to the red zone. Excuse me. You're reacting to the red zone and making conclusions on your red zone. That's not analysis. Okay? All right? That pivot cluster is bearish. It is. By definition, it is. It's unarguable. You'd have to be mentally deranged or simply don't understand technical analysis if you bought it there. I guess you could argue you went off the moving averages, but even that I doubt, right? Because even this one predicts the double top right there. So even if you're a bull, if you bought there, you're gullible, okay? Where do you buy then? Here or here? But the monthly M2, weekly M2 cluster is just as obvious as this cluster. So like as a bear, you should have sold this and you would have made money. As a bull, you should have bought this and made money. And do you understand like the implication of this? If you were a bear and did your job, you would have made money. If you were a bull and did your job, you would have made money. It doesn't even matter most of the time whether you're a bull or a bear. Most of the time, if you do enter where you're supposed to enter, your worst case scenario is break even. Most of the time, I mean, you're selling at resistance, right? Or you're buying at support. How wrong could you possibly be? Oh, I bought at support, but I got beat up. I lost 50% of my account. You're like, what? Right? So I'm trying to get you there, guys. Stop looking at your charts for answers. All it tells you is price. But you should be able to look at your chart and say, well, as a bull, I would buy it here, right? Or I'd buy it here. This one looks like support, but that puts us in a range, and then that changes my aggressiveness. So right now, I mean, this is an aggressive entry. You're still a happy camper as a bull here, even though it dropped all these pips. That's where you wanted it to drop. So a bear would have sold it here. I can't even see what is this, 134, and it dropped to 132. I mean, it dropped 150 pips, and now it's up, what, 75 or something? Cool. Do I know if it's going to go up here or down? No, actually, this is 50-50. I have no idea what's going to happen now. None. But I can tell you that that was a bullish zone. That's a bearish zone. I can tell you that there are bulls right here. I can tell you that. I know it. That's where a bull would buy. This is a maybe. I think this is kind of fool's gold. I would expect a bounce up into here and then an extension back down. Okay? But right now, I can't influence the market, so I'm really hoping it goes up and up and up if I'm a bull. And I am a bull. I bought it at a place where bulls are supposed to buy. Right? I mean, if you've taken any of my training courses or read my book or whatever, I mean, stuff that I was doing 10 years ago, you know that that's where I would buy. I'm not making it up. That's where I teach people. That's where you buy. So I bought it, and I'm making money. My stops at breaking. But isn't that what's supposed to? That's what you're supposed to do. But in reverse, I could have easily sold it here. It's the same trade. It's exactly the same trade. That's where bears would sell. This is where bulls are buying. And that's that. So I want you to get to that point, guys, where you're not trying to figure out, what does this mean? It bounced there. Should I be bullish? No, you should have been bullish down there. What do you do now? I wouldn't do anything at this price. See? Boom. That's the epiphany, guys. What about now? I have no idea. So how could you? Is this going to go up or down? I have no idea. It's not a buy zone. It's not a sell zone. I wouldn't expect anyone to trade here. I guess if you were a bear, you would be eyeballing this, but it went a little too high, and then the oscillator's already come off, so someone's going to buy this weekly central cluster. Someone's going to buy the moving averages. So, but it's a dumb buy. It's fool's gold whether you're buying or selling. So this is where amateurs usually get involved, right? Do you notice that this is 2 days ago, your entry, not non-farm payrolls? When you look at it this way, like non-farm payrolls hasn't even had an effect on the trade, right? Right? That's what I'm talking about. So if NFP moves this, NFP moves this. What can I do? Okay. But look at it this way. Would you recommend selling here now? I bet you'd say no if you saw the weekly and monthly pivot. We're on the hourly 21. It looks like it's going to bend, but even then it's going to bend. It's going to hit the 55. That predicts a double top. So even if you're a bear, it looks like it's going to do this. If you're doing any sort of technical analysis. Okay? But that doesn't look good to me. Okay? So that's what I'm saying, whether you're a bull or a bear, your new scalp is a new scalp. Don't confuse that. Volatility is just volatility. And once the volatility disappears, which is probably about now, the high volatility event-driven strategy is over. And then we got to go back. The market's adjusted to the new information. And what did it change? Is the ECB going to change? Are they going to change their policy because what non-farm payrolls? No. Is the Bank of Japan going to change their policy? No. Is the Fed going to change their policy? No. Is macroeconomics likely to change? No. Is this going to crush China? No. So we should just go back to doing what we were doing before NFP? Yeah. All right, cool. So what do you want to do? Right? Imagine Monday morning you're the lead trader at a hedge fund, and you got like 30 or 40 currency traders working for you. What are you going to talk about Monday morning? All right, guys, everything we've been doing, stop! We have a new thing now. Non-Farm Payrolls, boom. Do you see that 228? Boom. We got a whole new thing. No, probably not a whole new thing. I think the trend breaker is going to be just December 31st, right? So anyways, if you wanted euro yesterday, you probably still want euro today. That's what I'm trying to say in English. Okay, so if you are a buyer of pound or a seller of dollar, this is an interesting price. Okay, but it feels really rangy to me. I might want to just wait till Monday. Okay, let's measure this. Okay. In my pre-news, I killed the charts, right? Yeah. In the presentation before non-farm payrolls came out, I believe I said that you would have a 1 minute opportunity to trade a retracement somewhere between the 382 and 618, and that you could have a 5 minute opportunity. You see that from the post-news break, the post-news low to the post-news high, it came down exactly 38.2%. And now it's the 5 minute cycle. Okay. But the 382 predicts a 1618. That just gets us maybe to 118 and then full stop. So our target is really here. It looks like 96, 00 is there. Good enough for the girls I go with. Okay. So I'm going to lock in some profit. If it comes down, so remember the line in the sand is here. So by the time you approach the line in the sand, you should try to be break even. Well, in this case, I have profit locked in. Thank you very much. I have an inflationary gap. Cool. All right. Somebody said pound Aussie. Hey, I don't think I even have it, do I? Euro Aussie. I guess I have to go to an Aussie scan for that. Tell me gold, please. I thought we did gold. Ooh, I lost a little on my Aussie, huh? Yeah. Aussie Kiwi. It's so funny because like a lot of these. Okay, let me move over. Pound. Hey, listen to what I say. Well, you're sort of out of position, but if you're going for sort of a roll reversal type scenario off the higher high, we're sort of in that zone. The 382 on the M3. technically like buying at a M3, but it's just a pivot is acting as support. But the real support is, you know, the zone here kind of thing. That's an old high. And then, of course, the sweet spot, the 382 to 618. And then you notice that the 382 is also a pivot point. So therefore, you're like, oh, and the pivot point. But it's not like the M3 isn't a buy pivot point, but it's acting as support. But it's also a 382, and it's also just slightly off a roll reversal. So, you know, and you got your oversold position, so you're okay. That might be a buy for you, sure. Okay, so Mitch says, I vote Euro odd after pound Oz. Well, the thing is, it should be the same almost always, Mitch. I couldn't imagine a world where I'm long pound Aussie but short Euro Aussie. I can't even imagine it. I've seen stranger things. Oh, I've seen stranger things. But it would just be sort of weird. It'd be quirky, right? So I don't know. I don't know if I want to look at Euro Aussie. I looked at pound Aussie. What more do we need? Gold, I thought we did, but made up. Oh, I get it. Made up is doing so gold. Okay. But we already did it, dude. So let's go back. We'll do it on a different chart. How about that? Let me draw it this way. Let me draw it this way. I'm going to change the templates. Okay. I am now going to show you the monthly target. Okay. On the first of the month, a bearish move predicted this. Okay. So based on my technical analysis of gold, it should not fall further. Does that mean it should go up? I didn't say that. But what I said is, based on monthly pivot points, the predicted bottom has been achieved. It could fall further, but it probably won't. Now, a bull might look at that as being bullish. Well, what's really supposed to happen is if you're a bear, you're supposed to take profit. Okay? Okay, Mitch says, at the moment, pound Aussie is falling, but Euro Aussie is rising. Yeah, but it doesn't mean you should be trading them. You need to have a decision. Like if you told me you were short pound Aussie, but long Euro Aussie, I'd be so confused. I'm like, what is your plan? What's your strategy? Because you're buying and selling Aussie at the same time. It's just very convoluted. And then you'd have to prove to me like that's the best setup that you can find. So you're like, well, I'm bearish on pound. Okay, but Aussie's weak. So you're selling a week versus a week? Like that's the best trade? Really? Like maybe you're killing it on Euro Aussie? But I'm like, but you put money on pound Aussie, a weak currency versus a weaker currency? I mean, I think you should be doing something better. You should be, if you're selling Aussie, There's got to be something better than that, right? You see what I mean? So it's not that they have to move in conjunction, but you're supposed to pick the good winners. And that's like a mediocre at best winner. Okay? All right, so let me go back to this. This is where bears are supposed to get out for profit, which then creates weakness in the downtrend. So now a bull could look for something like a double bottom or some other indication that the bears have gotten out. Not just getting out, but got out. And then you could turn this north because there is a counter trend potential here, but the potential is only back to that on the short run. The long run might be significantly different. We'd have to really see. Here's what I think is going to happen. You ready? Or I shouldn't say me. This is what the charts tell me that might happen. Come on. We're going to have to do this on a different time frame. Hang on. There it is. Okay, let's do it that way. And then let me go back to 4 hour. Yeah, okay. Yeah. All right, you ready for this? I think this is the best realistic scenario for a bull. I mean, you know what? I'm even going to be a little more conservative. Okay. And the one thing you always have going for you if you're long gold is North Korea. The other interesting thing about that is gold will spike, but the US dollar will also spike. And you'll say, Wayne, but gold's anti-dollar. Uh-huh. But then you're like, but Wayne, gold's going up and dollar's going up. Uh-huh. Because people are looking for safety at that point. If like something serious happens with North Korea, right? In that case, gold will be safe, a safe haven. U.S. Treasuries will be a safe haven. Japanese yen will also get strong because JGBs will become a safe haven. And also people will stuff their money in Switzerland, in their Swiss bank account, and the Swiss franc will get strong. You listening? Gold will go up, dollar will go up, yen will go up, Swissy will go up. Right? What else? I would say what? Pound would go down, euro would go down, CAD, Aussie, and Kiwi would crash. Well, wait, I should be careful with that. I'd have to double check. That might depend, but probably not bode well for them. All right, I think my jet lag is kicking in. I'm starting to feel tired. I'm losing my voice too, since I'm so dehydrated. All right. So next question. What do we got? Talk to me, Goose. Hey, oh, listen what I say. Oh, oh, oh. Whoa. But anyways, I hope that made sense, Matt. No, I was in Shanghai, not Hong Kong. Oil. Killed it today, Wayne. You dropped a lot of knowledge. That's what I'm here for, fun. Oil, okay. We'll go back to oil. Cool. So you guys, do you promise to go to Trader's Way and open a demo account? Huh? Or am I going to see you on Monday morning so we can regroup on Monday morning and Tuesday morning and Wednesday morning and Thursday morning and Friday morning? Huh? Or are you just lurking? Huh? Are you just lurking? Look at my line in the sand. Thank you. Thank you, Maddup. Thank you, Mandia. Jay Scott's got a live, yeah. All right, hang on. What am I doing now? Oil or... Oh. Okay. Well, if you've taken my swing trading course at fxbootcamp.com, you know that there's 2 counter trend trades, only 2. One of them predicts this move here to get to the weekly central pivot. But how about this? This is the projected low for the week. It's just factual. I'm not making it up. That's the projected low. And then you get a double bottom, higher high, higher low. And by the way, I'm bullish. I've been bullish on oil since 46. Okay. DWT, why don't you contact support at Trader's Way and ask them? Double bottom at the projected low for the week. On Monday morning, the projected low was still here, which tells you that's where bears are supposed to get out. A double bottom is a reversal pattern. A double bottom with a higher high predicts the 1, 2, 3 reversal. Okay. Okay, the 618 predicts the 1382, which is here. Oops. Okay. And now we're up to the next level. You could consider this as, if it's easier for you, you can consider that an inverse head and shoulders. And if you know how to trade that, then you say, well, the distance from here to here, from this bottom to this top, let me get this right, should be just a couple pips higher, okay, predicts the extension, which is here. Isn't that neat? Oops. Well, you have to trust me, it's perfect. Okay. Again, that's not me making it up. That's just technical analysis. Okay. It's not actually an inverse head and shoulders. It's actually an inverse crown. If you want to look up how to trade an inverse crown pattern, it's just basic. It's what amateurs learn. I mean, it's still silly to think that way, but that's how amateurs learn. That's how you project the top of an inverse crown. So anyways, it hits that, but then the trend takes over. Because remember, this setup here on this particular day predicts the move back to the weekly central. It doesn't necessarily predict this or this, okay? The counter trend predicts this. And like I said, there's only 2 counter trend setups that I teach in the swing trading course. There's only 2. There isn't 10, right? There isn't one for every move that I can explain. No, there's only 2. That's one of them, and that predicts that. I don't know what else to say. That's what you do down here with this type of setup. So, again, if you open an account at Trader's Way, I'll see you every morning. We'll go over it every morning until you get it. That's why I do it every morning, so that we will, like water over stone, you will gather slowly and methodically the experience that you need so that you can more easily interpret the data to be in these trades. Okay? Now, to really blow your mind, you ready for this? To really blow your mind, that same course would teach you to sell down into here. Okay? And once you got there, you could, only in this situation, and it's just on the cusp. I mean, if this occurred slightly over to the right, no. It's that funny. Monday, Tuesday, or Wednesday. If it happened here, literally, no, forget about it. It ain't going to happen. So it's funny that right at the Alamo, if you will, right? That's its last opportunity to counter trend, then it counter trended. Okay? But so in that course, literally it says, if you're bearish, you would sell here, take profit, and then bulls could counter trend it back into the weekly central. Okay? Now it doesn't like, you don't do it blindly per se. Okay? But the fact that this happens here is meaningful. Especially, now this is the part I want you to think about. An amateur sees this and then says, I wonder what they're doing. Where in reverse, if you predicted this on Monday and then you hit it on Wednesday, and you already know in your mind that this is supposed to be a bottom, highly, 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 highly unlikely to fall further. Do you understand? You knew this on Monday. Highly, 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 highly unlikely to fall any further. In fact, might retrace back to the central. Let's say you obtain this knowledge already. And then on Wednesday, you watch it, double bottom, 1, 2, 3, inverse crown. See, this is a very, very basic reversal pattern. But here's the part that blows your mind. You expected a reversal pattern down here on Monday. Or certainly when this fell, you take your profit right here and you say, holy crap, I need to take my profit. In fact, I would expect a reversal pattern. And then you get a reversal pattern. See, if you have that much experience and knowledge that you know, up here you know, to take profit at this price. And then you say, I expect, I predict a reversal pattern. Not here, oops, like not here, not here, not here, not here, not here, not here, not here. Your prediction is when it gets down to that exact price, on Monday, not Wednesday, not Tuesday, on Monday morning. For me, it's Sunday night. Sunday night, I say to myself, if it falls and it gets to this price, then I would expect a reversal pattern. And if I get a reversal pattern, I would expect it to go here. Now, look, it hasn't gotten there. It got pretty close. So you can say, oh, well, good enough. But the thing is, you're thinking it not even here, but way up here. Okay? That's a lot. And an amateur trader is trying to figure out what to do here. Well, the here is irrelevant. You understand that? Like even here is irrelevant. All that's irrelevant. It's irrelevant information. You're trading after all the professionals have traded and gotten out or traded and moved their stop. Right? A professional is not trading here. I mean, maybe, maybe we could argue here, but that's really sloppy seconds, leftovers kind of stuff, right? Like that's not really a professional entry. Okay? Okay, the week before, let's take a look. Now the week before, you have to go back in history. Got to way back in history. We had monthly pivots because this was in November. And I believe we hit our target. If I remember correctly, one of these was a stop trading setup. And I think it was this. Okay? But we had different pivots then. And the new pivots are now. Okay? But again, what I'm trying to say is, do you see this pivot here? This December pivot? M2? Once again, I don't know if you know how to swing trade, but if you take the swing trading course, I did it in March. It's 10 hours long. And I tell you, when you're doing monthly swing trades, that is the most important pivot that there is. It's like an OMG, slap in the face, kick in the shins, poke in the eye. You can't miss it. You're like, oh, I didn't realize you kicked me in the shins and poked me in the eye. Didn't even notice. Of course you noticed. Right? I mean, it's like that. It's just like that's what it is. That's what that is. That's what that line is there for, to say it'll probably go up from here. Now, but only if you're a bull. And if it does, it's going to go up for a while, like the rest, or let's say a big part of December. Okay? That's all that is. And then this green zone, the bottom of the green zone, where I drew this target line, this 55.86 or whatever it is, you know what that is? That line tells me that's the bottom for the week. That's the projected low for the week. And it did it on a Wednesday. Like, it's done. The bears are supposed to take profit. But long-term bulls, the people that think eventually gold's going to go, or oil is going to go to 65. Okay, listen to me. The guys that were bulls 2 weeks ago, 3 weeks, I've been a bull. I think the first one was like, what was it, 40? And then went up and came down and it was 46. And then up to, I mean, I've been a bull on oil for months. I'm a bull. I am a bull. That's what it is. I don't know how to say it any differently. I am a bull. Okay? So that's a bullish entry. Look. I mean, it just is. I just have been. So if I'm a bull and I understand the markets come down. It doesn't mean it goes up forever. A trend is a higher high with a lower low, that with a higher high with a lower low. You get downward moves. Great. So where would a bull buy? I already had it marked. A bull would buy here and a bull would buy in here. Now check this out. A long-term bull that was bullish last month and the month before would start buying on this area right here. Like pennies from the projected low for the week. That is a buy zone. I don't know, there's no other way to describe that, right? And so like if you're a newer trader, I'm trying to like be the one that slaps you in the face and say that is the area. There's no discussion about it. And that's how professionals trade. They know if they're a bull or a bear. They know why. They can back it up with a PowerPoint presentation of why you should be buying oil, not selling oil. So when you wake up in the morning, you're like, oh, I hope oil's at support, right? You have nightmares like, oh my God, I didn't buy it. I didn't buy it at support. And you wake up and you're all sweaty like, oh my God, it fell to my support line. And I thought I didn't buy it. Like, you know you're a buyer. You don't need your charts to figure it out. Now, your charts tell you your prices. So this it's a buy. So if you're an experienced trader that uses technical analysis, not just fundamentals, it's just it by definition. And then if you are a bull, you should be long, and you probably are long. Would a bear sell here? Look, it just made a lower low. Should a bear sell here? No. Okay. The double top gives you permission to be a bear. Bears love that. The fact you opened up at the weekly M3 is such a killer place to sell. Off a double top, if you sold this, you know what you're doing. If you bought this here, you know what you're doing. And I think even this down then up and retracement, it's a little moderately okay, but it's a little late. It's a little after the fact. I think it's almost 50-50. You could have got killed on that. So it's like if you sold here up in this zone on Monday, you know what you're doing. If you bought down here on Wednesday, you know what you're doing. And everything else is weak at best. If you're trying to analyze your own trading, if you did something else, even if you made money, it wasn't good, man. Okay? But do you see the theme here? You have a bias. You develop plans. You don't know if you're going to make money. You don't know how much money you make if you do, but you know the price that you're interested in buying. And you don't even actually know if you get the chance to buy, but you just know the price in which you'll consider buying. Okay, why not sell here into resistance? Because you're at support. Okay? Was there ever a signal? I don't know if I know what you mean. So once again, if you have a bias, GM, and you know technical analysis, this is selling. That's a sell. If you're a bear, you simply sell here, put your stop above the highest high, and you're done. That's all there is. And your target on Sunday, so in New York time, that's Sunday afternoon. So I would put my target at S2. That's all there is. That's how you swing trade. Your stop would be here. Your entry's here. Your target's there. And it's done. That's why it starts to go up here. But on the first of the month, which is about the same, the first of the month is here, right? Okay. So if you are a monthly swing trader now, a longer term trader, long term, okay, where you're in this for weeks, not days. Do you understand that here you would say, all right, I'm a bull. I would buy it here at 55.86 and I'll be long the entire month of December. Or I will take profit at the first conservative target for this swing trader is here, but the aggressive target is here. These are all just like factual things. They're not arguments. I don't know if it's going to do this. I can't predict the future, right? I don't possess an alien intelligence or something that, I haven't seen the future. But technical analysis says if you're a bull, and in particular you're doing monthly swing trades, you would buy at 55.86. This is Monday. No, not even though we're in Friday. On Monday, actually Friday of last week, right? On Friday of last week, you would have said, okay, I'm a bull, but I want to buy down here. I want it to fall about $4. And if so, I will buy the low at the monthly M2. And my target will be 60.60 and 61.68. Conservative, aggressive. And you can make decisions along the way whether you're conservative, right? And this weekly move at that point also says, well, it'll go up to the weekly central, and then it'll probably fade Monday, and then Tuesday we'll start working our way up higher to the target. Okay? Again, not opinion. None of this is opinion. My bias is my opinion. Like why I think I'm a bull on oil, that's opinion. But when we talk technical analysis, again, it's like a concert pianist that simply can play Mozart, and then you're like, oh, no more Mozart, let's pull up some Beethoven. Okay, let's do Beethoven now. Here it is, go. I can play this all day. It's just technical analysis. It's meaningless. All it helps me do is identify levels of support and resistance, buy zones and sell zones. It doesn't tell me whether I should buy or sell. Now you could do things like price action. Okay, so it bottomed out here, made a higher high. Great, so everybody knows that you take this, you take that, and you buy somewhere between here. That's very, very simple price action stuff. Okay? Right? Probably here to look at. Let's do the next one. There's, well, it's basically the same one, right? And the next one's down here. So, all right, so between these two red lines, based on pure price action now, not even fibs. Let's get rid of fibs, okay? Get rid of fibs. Let's get rid of pivots. Let's get rid of moving averages. Let's get rid of MACD. All right, I am naked. Using nothing but price action now. The higher high off the bottom says that I'm a bull now because higher highs don't exist in a downtrend. I don't even know what currency I'm looking at. It's irrelevant. Because now I'm just talking technical analysis. What's relevant on currency pair is the fundamentals. Things like macroeconomics and import-export data. Money supply, even. Because, you know, money supply predicts inflation. Inflation predicts interest rates. Interest rates usually predict money demand and stuff, but not always, right? You can get hyperinflation, that's different. But anyways, I'm only looking at candles now, okay? I have no other knowledge of anything. Except this was a downtrend. Then it bottomed out, and then it made a higher high. Hold your horses. In that scenario, a higher high doesn't belong in a lower low. So now I could just simply say, after a bottom of support's been identified by price, right? And by that I mean no lower lows, no higher highs. So this, it moved down, then it moved sideways. Then it broke up through resistance and became a higher high. So therefore, by definition, using nothing but price action, no indicators whatsoever, no fundamental analysis whatsoever, I simply know I need to buy the role reversal. So where's the previous highs? Here and here. So that's my new buy zone. Oh, look at that. Do I know if it's going to go up now? No. I only know where to buy. Okay? That's what technical analysis is. I don't know if it's going to go up. How could I? I don't know any fundamentals. I don't even know what currency. I'm really purposely not looking. I guess I have to point here. I don't know. I'm not looking at this corner. I don't even know what pair this is. To me, it's irrelevant because I would need to do fundamental analysis for that. But if you know technical analysis, if you know how to do price action, okay. Now you're like, well, but couldn't it go up? Yeah. Couldn't it go down? Yeah. How'd you know it'll do this? How'd you know? I don't know any of that. Could it go up or down? Yes, it could. Totally. I don't know any of these things. I only know where to buy and where to sell. I don't know how many people are buying. I don't know how many people are selling. I don't have that information. I don't know that information. I only know the right places to do it. Okay? So if this fails to make a higher high, I can tell you then the bears are probably setting up a 382. See that? And that's why you'd be a fool to buy up here. Okay? But you could buy it here all day long. So again, the technicals don't tell you whether it's actually going to do this or not. But if that's your strategy, if you want to be a bull, that would be the place to buy it. And you could have been like super smart or something and somehow knew this was going to bottom out. Maybe it was a pivot or something. I don't pretend to ever know that. But I can tell you if it stops falling and makes a higher high, just technically now, you'd buy the roll reversal. You'd buy the 382-618 fib retracement. And you would expect it to go up, but it may not, because we know this is, we call this fib wars, right? This is where, right? Bulls are buying here, bears are selling there, and everyone else is losing money. You got it? Bulls buy here, bears sell there, everyone else just sucks. And what is this? Ah, this is peso. Oh my God. Peso, how funny. Hello, peso. Fell early, huh? Yeah. Fell early this year. I don't know what's going on there. Yeah, pretty disappointing month. Maybe it was because I was out of town. Sorry about that. I didn't trade it, so the market didn't collapse. Okay. So now what, guys? So I got knocked out at break even. Notice that in the presentation before the news came out, I said draw a line in the sand, and as price approaches it, you need to move your stop to break even. And I said, because if it's going to fall or fail, if the extension is going to fail, it'll fail there, it'll collapse, you had the opportunity, but it cost you nothing. A free opportunity per se. It's not free until you move your stop. But I did tell you when we got to this line that that's where you should move your stop to break even, and I did move my stop to break even. So there you go. So what do you want to do now, bro? Hey-oo. I'm exhausted. So I have 15 minutes left. So either I pull the plug early just because I've been traveling for an unbelievable amount of time. I'm losing my voice, getting sleepy. Or you give me some good questions. Help me out here. What do you think will happen to money flow after Trump's Wednesday announcement? It's bound to make commotions. I don't know. Let's see what happens. Brooke, there's probably a lag, so I'm not sure. How would you set up the beast with the roll reverse? Okay, much better. Better question. I'm going to go to the beast one. Thank you, Ryan. All right, so there's daily. Okay, so it really depends on how you're trading this. All right, are you trading that as a failed top? Then a bear could potentially sell the heck out of this. And if you're a bull, gee whiz, right? Where was your buy? Was it down here? Let's change it to a 4-hour now. Right? So if you're a bull and you bought in there, well, let me draw. Then what do you do? Do you adjust? I don't think you adjust yet. So you're doing 1 hour 55. So that predicts at least a new move up, right? So I think if I was a bear, what I'd want to see is down to the 55 and then a false rally. If I was a bear. Ryan says there's a buy. Yeah, it's not a good one. That's all. Right? It might be a buy, but it could be a good buy. That's why I started here, though. Okay? What does this tell you? It tells me that even if we do this move, this downward move, that we're going to be buying it back. It's a retracement to the 21. So it tells me like down and sideways today, up on Monday, down on Tuesday. Okay, or maybe down. It seems to me there's still an opportunity to buy it, but maybe lower, because there's no doubt that this is topish, right? Sure, we'd like it to break up, though. No, because I am looking at oscillators. Do you see the oscillators? I see them, honestly. It was funny because I just said, you said why on Monday? Because low volatility. I'm like, no, the oscillators. And then I was going to explain it. And I realized I see the oscillators, except they're not there. I'm calculating them in my mind. But see the oscillators? It's funny. I honestly thought they were there for a second. See those oscillators? They tell me, maybe sort of down to sideways, and then maybe we pick this up late Monday or early Tuesday, and we break up to the upside. But because of the oscillators, we have to roll it to an oversold position on a 1 hour and even a 4 hour. So that's telling me Monday New York or Tuesday London. Pound yen goes up. See? And then I looked, I had that all in my mind, and then I'm like, oh snap, there are no oscillators. You know, I see 10 people. Well, yeah, not 4 hour, not down, 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 down. I'm thinking daily up, up, up. So down on the 4 hour, but maybe 21 or lowest 55. So I'm really, what I would prefer, because I'm bullish, right? I would prefer, let's kind of continue that. And then let's do the time warp again. Like that. So now I'd have to look at pivots and stuff. But let's call it like that for today and Monday. And then Tuesday is a move here. In fact, we'll do it like that. Let's do, so Monday, New York, or Tuesday in London. And the only way I come up with that guess is the oscillators that we can't even see. So that may not be accurate. Something to that effect. It's more like, it's not that they're going to do it, it's that you would look for it. It produces an if-then. If they do it, then you know what to do. See, what I'm predicting is what other people are going to do before they've even thought of it. Right? So that means, you know, I'm not just another pretty face. I'm not just an ex-supermodel. I also have to figure out what other people are going to do once they figure that out. And then be ready for them. Yeah. So they won't figure it out till Monday, and then they're like, oh snap, look at this. So whatever. But I don't know if they'll figure it out. Okay? Singapore was nice. No joke, I check into the Ritz-Carlton. I have a club level suite with the best view of Singapore facing the harbor, the bay, and all the iconic buildings of Singapore. Can't get a better view of Singapore at all. The best that money can buy. And I hated it. I checked out the next morning. Checked out. Like, I can't be here. This sucks. This totally sucks. So I checked out, and checked into the raffles, and I am so happy I did that. I'm so happy. I loved it there. The fact that it was December and it was warm and tropical, it was nice. Any other questions? We're running out of time and energy. I think we kind of said everything, right? So unless it's like a fundamental question, or you guys didn't ask any like trader psychology stuff, which is fine. I'm too tired anyways. No, thank you for your time. Please open an account at Traders Way. We can work together on Monday and Tuesday and Wednesday and Thursday and Friday of next week. Okay? Did I eat? No, I didn't eat seahorses. I had chili crab. I had some great soup from a street vendor, and I'm eating the soup, and I'm sweating, and everything is going good. And then the guy next to me starts hacking up roasted duck and roasted pork, and I'm like, oh my God, I gotta have some of that too. It was great. Nothing too exotic. Roasted oat shrimp. That was pretty nice. But I think I could go on a food vacation there in Singapore. So it's like one of these things, like you're at the Ritz-Carlton, like you call down to room service, I'd like a cheeseburger and 2 beers. And like there you are, eating a hamburger, fries, like a child. But it's 2 o'clock in the morning, what else are you going to do, right? And you get the bill, it's $100. You're like, what the, right? You're like that. And then you go to the street vendors, and you get an awesome bowl of seafood soup. Okay, just awesome, filled with the sweetest baby bok choy ever, and fresh seafood and noodles and spice and chili, and and it's like $4. And I'm thinking, this is way better than $100 hamburger at the Ritz-Carlton. You know? Like, seriously, like, wow. Awesome. Just awesome. So, I had a great time. I'll see. I'm going to show you some pictures. Maybe that's how we'll end it. Don't do pictures. Sorry, I'm tired, man. I'm jet lagged. Oh, and I fell in love with dragon fruit. Do you guys know dragon fruit? Can you even see that thing? It's like bright pink with green thing sticking out of it and a giant leaf thing. It looks like a 6-month-old potato, except it's pink and green. And then I cut into it. Where's the other pictures? What? Then I cut into it. And I'm expecting something that kind of looks like maybe a grapefruit or an orange or something. I open that up and I'm like, what the F is that? It's white with black seeds. I've never seen anything like it. Look at that thing. There's the leaf sticking on the top. And there's no core. There's no, like if you cut open a pear, at least it's tough in the middle, right? Where in some fruits, like an avocado, right? It's kind of the consistency of a pear or an avocado. There'd be a nut in the middle. It's just fruit in the middle. And you scoop it out. It's nice and soft. I ate it with a spoon. You just scrape it out like you're cutting up an avocado or something. And it was awesome. I'm like, oh my God, this is my new favorite fruit. Look at that soup, huh? Nice. That made me so happy. I'm walking around like, I'm just so happy, right? I couldn't be any happier. And then all of a sudden, like, what the is what the hell is this guy doing? You see that? What the hell is this guy doing? It's duck. It's pork. Oh, give me some of that. So he's hacking it up right there. What he's hacking up, I ate. I'm like, oh my God, give me some of that. That's what I want, man. That fat guy is me. Hi, I'm a tourist. I like to eat from street vendors. Oh, yeah. All right, here's my view from the Ritz-Carlton. Hello. There we go. I know, right? Wasn't bad, right? You know, Singapore, this is it, man. That's prime time. It sucked. So I got the hell out of there. Oh, you know what I should do? I should do it like this. Ha ha ha. I lost my gallery. And then I checked in to my new home at the Raffles Hotel. That's so much more like me. Huh? I don't think that'll work now. That's more like me. Old. Did you? So Singapore has the best vending machines I've ever seen. Check out this vending machine. I'm like, yeah. Yeah, nice vending machine, huh? Yeah, I'll take the 100-year-old Scotch, please. Mm-hmm. Yeah. Here's Daniel. If you guys know Daniel, that's us eating lunch. Don't know what else. That's it. I was only there 36 hours. I traveled for 80. That's pretty much it. I thought there was another one. Where's my WhatsApp? There's something I saw on WhatsApp. It's funny, I have other people's WhatsApp pictures, but not mine. Huh. Okay, it was after that, before that. Oh, there was a funny picture and it's not in my gallery, so I guess I gotta, how do you find it on the WhatsApp? Do I have to go back to WhatsApp? You gotta see this though. Let me get out of here. Okay, there's some good pictures, good pictures, good pictures, good pictures. Hang on, don't run. Hang on. All right. What do lonely businessmen do when they're thousands of miles away from their spouse? Is there a cliche? You know, there's always a cliche, right? Now with technology, you can use Uber. There's me going from the airport in Singapore to the Ritz-Carlton. And I could also order up some Uber ass. It's not bad for 17 Singapore dollars. I'm like, what? I get a taxi, or I can get some. I couldn't stop laughing. I'm like, oh my God, I can order up some Uber ass. So I know this is a family show, and I should apologize, but that was pretty funny. That was pretty funny. That was probably the funniest thing. Yeah. Technology. I'm like, oh my God. Yeah. You don't have that in America. At least I don't think so. So I'm not sure what it was. But I didn't click on it. I just went with the Uber XL. But that's a true picture. That's a true image. I'm just like, oh my God, take a screenshot, right? So anyways, I thought that was funny. All right. Well, I've wasted enough of your time. I'm sorry. I'm jet lagged, so I'm tired, even though I've only been up 4 hours. So, but anyways, I hope it was a good non-farm payrolls. I enjoyed it. I hope you learned something. I know your time's valuable, and many of you spent hours with me today, and I appreciate that. Thank you for your loyalty and respect every day. If you have a demo account or a live account at Traders Way, then I work with you every single morning at 7:30 a.m. New York time. So I will be there at the webinar on Monday. Thank you to FX Street for hosting the 140th month of Trade Non-Farm Payrolls Live. And if this event sucked, it's because I'm tired. I'm sorry. But I hope it didn't. So thank you to FX Street for being wonderful hosts. They're good, kind-hearted people. Tall, good-looking people with ginormous hearts and big brains. Generous people. So thank you, moderator. Yes. So goodbye, guys. Goodbye. I'm sorry if I was too silly. I don't like Wayne. He's too happy. So now I'm up. Well, I have more than the 400 pips now. I probably have more like 500 pips now for the day. Cool. It's a good day. So peace on earth. May the pips be with you. May your profits be above average. I'll see you later. Bye-bye.